Okay, let's continue. So, how do you identify support and resistance now? You know what a resistance is. You identify resistance from the upper side of the trade, meaning that you are identifying where the market is coming to for it to sell, right? So first you go to this toolbox. Look at this area. Here is your toolbox. Like this environment is where you find your tools. This environment, this is where you find your tools. Whatever tools you feel comfortable with. But for this course, we are just going to bring out a rectangular box. We are just going to bring out our rectangular box. Where are you, rectangular box? Okay, it's here. Good. So this is the rectangular box. You bring it out, you identify it. How do you identify it? You start your first opening of the box from the upper wick of the last blue candle because it's a cell, right? So since it's a cell, from the first week, you know what a week is, meaning that from where the market, whether it rejected or did not reject, you just put your first touch there, then you put the second one, end it in the second, like in the bottom of the blue. Now hold on, let me zoom this clearer. Now look at this market. You see this candle here, this place. Where is this? I want to make sure that you are seeing everything. What is that tool that oh no, this is not the tool I'm looking for. I'm looking for a tool that can help me circle this out. I must make sure you understand this. Okay, great. So this is it. So you see this candle, this blue rejected candle. This is where you do your opening from the up and then the closing below. Good. So you can also call it a bearish engulfing. Bearish. Sorry, sorry, not bearish engulfing. Bearish order block. Too many things for head. Sorry. Um, bearish order block. That's what we call bearish order block. That is what we call a bearish order block. So this is it. Now that's a class on its own, different class on its own, to be able to explain what an order block is. That is if I have not talked about it. But if I have, better still, you can just go back to your notes. That's a different class. I don't want to compress this class with a lot of things. I want you to be able to understand one thing at a time. Okay, so now you understand how I was able to do my opening, right? uh, these things get out of my way. Better. So let's bring out our box again. Good. So this is it. You Can you identify what I just did? I'm sure you can. Okay. So this is it. You just stretch it, and that's what we have. We have a very good resistance. Now you go below. Do the same thing you did on the resistance. Look for the first touch. Pick pick the last bearish candle. It doesn't concern me if this market here broke this zone. It means that this candle, this chubby candles we see here, it means that this market rejected this environment and broke. But at the end it bought, right? It was manipulated. That's what I want you to understand. There was a very good manipulation here. So that's why it broke. A lot of people who had their pending orders here was taken out before it bought. But that's if your pending order is not, that's if your SL is not so close to where the entry is. If you are somebody who do a proper risk management, you should be able to take out your SL very close. You should take it out, make sure that it's a bit far from you, not too far. You have to do your lot size calculation. That's why I always say don't risk high always risk low to start with, and then when the market moves in your favor, there's what we call trailing entry, trailing stop loss. As it is going, you are adjusting your SL, you are putting yourself in more positions, put your Excel behind the previous. That's just what I keep saying. So this is our support and resistance. Now, this alone explains that, okay, we have, no, I like it to be very clear for us to have a proper understanding. Okay, so this is the market, right? Now, after doing this, don't forget, the first thing you do, identify the trend of the market. We have opened this chart, we have seen that the market is bearish, but on a smaller time frame, which is what? Like, if you look at a smaller picture, you see that it is buying. What do? If you even still go to a lower time frame, like 1 hour, 2 hours, you still see it that it is buying. You don't even need to go to that lower time frame. You will see it from here too. So don't be confused. That is one thing. Now, I just said identify trend. The next thing you do is what? Identify your support and your resistance. Number 3, if you are somebody who work with trend line, bring out your trend line box. Identify the trend of the market so that you know where to enter and where not to enter. Thank you. So let's get our box. Let's get our tool. The tool we shall be using, parallel channel. That's what we are going to use. We're going to be using our parallel channel. Oh, sorry. Okay. Did you see what I just did? You first put it on the first touch. Remember what I taught you about the rules of trend. The rules of trend line. This is the rule of trend line playing out. Good. So this is the bullish band. This is the bullish part here. First touch, second touch. Do you understand? You can actually say first touch, second touch, third touch, fourth touch. Just be doing it like a staircase. That's how you do it. It's an ascending trend. It's trying to go up. Therefore, it's just going up, down, up, down. You get it. So first, second, I think this is too far. If I should say it this way, it's not that bad because this was where the rejection happened. But then it broke this zone. I can still put it in this zone because I don't give a fuck about this zone, because if I should say where did this market respect, this market reversed from here, so this is what I should respect, not even this. Okay, so I just need you to know that there was a very huge manipulation here that brought in the market back again. So that's it. So but then what are we trying to say now? We are trying to say that this market is most likely to keep going up, or it will come down to this zone before it will continue its buy movement, or better still, it will come and balance here. That is if it is not buying. If it is not buying, if it is buying, it has no reason to come down here, if not to come and retest the resistance, the support zone. This is the support zone. Do you understand? So for any reason this market wants to be bullish, it will just come here, touch, and continue. So now we have identified the third item. Now there's something I call levels, zones, psychological levels too. So now you're going to bring out your tool which you'll be using to identify these zones. First of all, why did this market reject from this zone? First of all, why did this market reject from this zone? Why did this market reject from that zone? Now I want to make sure that everybody's understanding what I'm saying. So here, why did this market reject from this zone? Why this place? Why info from here? I will show you why. So good. So okay, what am I even doing? Let me communicate with you. Okay, look by the left hand side. You will see where a market came and boom, it went up, right? This is it. Let me bring I want to make sure you're following up. This is the reason why I put this level here. This is the reason why I put this same level here. Okay, in fact, if you still want to put a level here, of course nobody will question you. You still put your level here. These are what we call psychological levels. Why do we call them psychological levels? Because they are places that the market can just come and reject. What do you mean by reject? If your TP was around that corner, it will not hit there. It will just reverse back and you will miss the profit you were making. Hmm? I don't know if you understand my point now. Ogaresto, look I see road. This you can call here psychological level 2. So what does this mean? This means that, okay, let's get another zone again. Okay, very good, very good. So this is another zone here. Now what does this mean? If this market is coming down, it's most likely that when it gets here, it will boom, go back up, or it will touch here, still come, touch down a bit because of what? The law of the trend. The law of this our trend line here may likely want to come and touch and to feel this imbalance that has happened in this environment. Now if you look very well, you will see that there is an imbalance here. What is an imbalance? An imbalance is when the market has moved to a certain level and is yet to come and cover up the candle space that it created, meaning that the market created a certain kind of uncomfortable space, so it needs to come and take balance. It doesn't always happen, but you just need to, as an analyst, you just need to take note of it. Are we together? So this is what an imbalance rather looks like. Even this one self is an imbalance to an extent. That's why the market tried to come and retest, but you can never tell the market where to touch to an extent. Yes, so your job is just analyze and take the trend is your friend. That's what I will always say. The trend is your friend. What do I mean? If this market comes down to this point or to this environment, bam, you enter it and you see that the market will take you above. But then if it decides to break this zone, because don't forget, the market can decide to break this zone, but you must still take note as a very good analyst. You must take note that there's something called previous low. Look at it. This environment is a previous low. That environment is a previous low. This is a previous low. This place is a previous low. So whatever you do, put your entry in a comfortable zone and put a very good lot size, so that when the market is coming to touch this environment, you will not fidget and run away from the market when the market is not even intending to break this zone. It's just trying to take out a lot of people's stop losses, because some people who are on this trend, the market may want to take them out. Because what is market without liquidity? What is liquidity? Where the market comes to attack a lot of people's trade and all of that, take them out of the market. So that's how the market works. So therefore, only the people that survive in this forex market are those people who do not put in too much greed. I know that I not say that greed is not good, but when you want to put in too much greed, you must have a separate account for such kind of level of risk appetite. So thank you. That's that about the particular topic we're just talking about tonight. So is there something you'd like to ask me? Sorry. This thing is just stressing yourself in me. So thank you so much. Is there any other thing I'd like to expatiate? Please drop a message for me. So in this nutshell now, what are we trying to say? That the market is on a lower time frame, it is bullish, meaning that this market, we are expecting it to come down here. Look at my screenshots, that one I sent to you. You will see more details about it, where I showed you that the market was doing a higher high, higher low, higher high, higher low, down to this place, and then it still went up again, higher high. Your job is to analyze, of course. Just like people who forecast weather, do they always tell you that they are 100%? No, they tell you 98%, 70%. You use it and guide yourself. That's what I mean. So thank you so much for the class tonight. If there is any other thing you'd like me to clarify you on, I am available. So thank you so much.